Hey guys, just a quick video. This is a spreadsheet that's kind of going to visually show you what Fuad's already talked about in the previous part of the video. So what this thing shows you is risk to reward ratio, your win percentage, and your risk per trade. So this is basically if you're compounding your losses or gains, it'll take 2% of what your account size is at that point in time. So say you have a $10,000 account, 3-to-1 risk to reward ratio, 40% win rate, and 31 trades, you can expect something like this in your first month if you took, one trade a day. And you can see the win percentage is low. So 3-to-1 risk to ratio with a low hit rate, still extremely viable. Clear it one more time and try to get. I'll do these a couple times each setup so you can see kind of even with the random number generator what it looks like. So it's pretty comparable. So if you're consistent with your win chance and your risk to ratio same, consistency, this is what you can expect. So let's show you this one. Let me show you the same win rate with 2-to-1. You can see, you can expect a little bit less when you do that, but it's still profitable. Let's try it one more time. Profitable, but you can see not nearly as profitable as if you, were patient and look for the juicy 3-to-1s or more than that. So now let's look at a high hit rate and low risk to reward trade. So basically this would be the type of guy that waits around for his trade to take off, or waits through drawdowns and lets it come back and then gets out break even, stuff like that. So somebody can brag that they have a 60% win ratio, but see here that it's still mildly profitable, but not as much as you would expect with such a higher win rate. Let's do this one more time. You can see this time they got lucky. Probably was a win streak in there early on that grew the account. Let's try it a third time here. You can see this time not so profitable. So I would not recommend a higher hit rate if you're gonna sacrifice your risk to reward ratio here. So last example, 50% hit rate. So let's say you're being a little bit more gutsy and you're not just getting out when it breaks even. A 2-to-1 here. And you can see it's profitable. There you go, still profitable. So even a 50% win rate, if you just wait a little bit and take a little bit juicier trades and be patient, you'll be fine. You'll be a professional trader. Even if you upped your position size a little bit, you can see that it's completely viable. It really depends. So another concept to talk about, and then I'll end the video, is that when you're starting an account out, it's really important that you have a good, you're not taking loss streaks early on. You can see this one was a win, but then you took a hit. And I had a good winning streak. Then it was loss after loss after loss of compounding losses. Right, and you can see how that affected the account later on down the line. Look at this losing streak here. The risk to reward was just not enough to cover this. You can see the account barely made any money. Oops, I compounded it that time. This time, good. So it's really important to pay attention to the runway, we call it, at the beginning. Try not to blow up your account by taking too big of position sizes early on. See, this is not so bad with 5%. But if you're taking 10, 15% percentages that Fouad talked about, that's going to blow you up. So don't do it. Risk less, be patient, trust your strategy. And if your stats are truly what you think they are, these win chance and the risk reward, you'll be good. Thanks.